Did you know that a whopping 90% of people who try to day trade lose money? That's right, 9 out of 10. It's enough to make your head spin. But don't let that scare you off investing altogether. The truth is, most of those folks are going about it all wrong. They're treating the stock market like a casino, chasing quick riches and making impulsive decisions. But smart investing is not about gambling. It's about building long-term wealth, step by step. Investing is like planting a tree. You choose the right seed, plant it in fertile ground, and nurture it over time. You don't expect it to grow into a mighty oak overnight. The same goes for your money. With patience, discipline, and a little bit of knowledge, you can watch your investments grow and flourish over the long haul. So, if you're ready to ditch the get-rich-quick schemes and learn how to invest like a pro, buckle up. We're about to embark on a journey to unlock the secrets of successful investing and empower you to take control of your financial future. Investing. It sounds complicated, right? Like something only Wall Street hotshots in fancy suits do. But here's the truth. Investing is for everyone. It's simply the act of putting your money to work for you so it can grow over time. Think of it as planting your money seeds in a garden of assets, like stocks, bonds, or real estate. Instead of letting your hard-earned cash sit idle in a savings account where it barely keeps up with inflation, investing allows your money to generate more money. It's like a money-making machine that works for you 24/7, even while you sleep. Why is this so important? Because investing is the key to building wealth, achieving your financial goals, and securing your future. Whether it's retiring comfortably, buying your dream home, or leaving a legacy for your loved ones, investing can help you get there. Let's face it, the world of investing can seem intimidating, especially for beginners. There's a lot of jargon, a lot of numbers, and a lot of fear-mongering out there. But don't let that scare you off. Let's debunk some common investing myths that might be holding you back. Myth number 1. Investing is only for the rich. This couldn't be further from the truth. You don't need to be a millionaire to start investing. With micro-investing apps and fractional shares, you can begin investing with as little as $5. Myth number 2, investing is too risky. While all investments carry some level of risk, it's crucial to remember that risk and return go hand in hand. Higher potential returns usually come with higher risk and vice versa. The key is to find the right balance for your risk tolerance and investment goals. Myth number 3, I need to be an expert to invest. Gone are the days when you needed a financial advisor to navigate the complexities of the market. Today, there are countless resources available online, from educational websites and articles to user-friendly investment apps that simplify the process for beginners. So, you're ready to dip your toes into the investing pool, but where do you even begin? The good news is, there are tons of different investment options out there, each with its own set of risks and potential rewards. Let's explore some of the most common ones. Stocks. When you buy a stock, you're buying a small piece of ownership in a publicly traded company. You make money when the company performs well and its stock price goes up. Stocks are considered higher risk, but offer the potential for higher returns over the long term. Bonds. Bonds are like loans you give to governments or corporations. They pay you a fixed interest rate over a set period, making them generally less risky than stocks. Bonds are a good option for those seeking more stable income. Real estate investing in real estate involves buying, managing, and selling properties for profit. It can be a great way to build wealth, but often requires a significant amount of capital up front. Mutual funds and ETFs. These are baskets of stocks, bonds, or other assets that allow you to diversify your investments easily and affordably. They're a great option for beginners who want to spread their risk across multiple holdings. Risk versus reward, finding the right balance. Remember that game show where you had to choose between door number 1, door number 2, or door number 3? Investing can feel a bit like that too. But instead of hoping for a new car or a trip to Hawaii, you're weighing the potential risks and rewards of different investment options. The golden rule of investing is this: higher risk, higher potential reward. But with higher reward comes a greater chance of losing money too. That's why it's crucial to find the right balance for your personal risk tolerance. If you're young and have a long time horizon until retirement, you might be more comfortable taking on more risk. You have time to recover from any market downturns, but if you're closer to retirement and need more stability, you'll want to lean towards less risky investments. The key is to create a diversified portfolio that aligns with your investment goals, time horizon and risk tolerance. Don't put all your eggs in one basket. The early bird gets the nest egg, the power of compounding. Let's talk about one of the most powerful forces in investing: compound interest. Albert Einstein is said to have called it the eighth wonder of the world, and for good reason. It's basically the snowball effect of earning interest on your interest year after year. The earlier you start investing, the more time your money has to compound and grow exponentially. Even small contributions invested consistently over time can add up to a significant nest egg down the road. Let's say you invest $100 per month, earning an average annual return of 7%. Over 30 years, that would grow to over $100,000. The magic of compounding is that it rewards patience and consistency. The longer you stay invested, the more your money works for you. So don't underestimate the power of starting early, even if it's just with a small amount. Dollar cost averaging, your secret weapon against market volatility. The stock market can be a roller coaster ride, full of ups and downs that can make even the most seasoned investor feel queasy. But fear not. There's a simple yet effective strategy called dollar cost averaging that can help you navigate market volatility like a pro. Here's how it works. Instead of trying to time the market and invest a lump sum all at once, you invest a fixed amount of money at regular intervals, regardless of the market's movements. This way, you buy more shares when prices are low and fewer shares when prices are high, averaging out your cost over time. Think of it like buying your favorite coffee. If the price suddenly doubled, you'd probably hesitate to buy as much. But if it went on sale, you'd stock up, right? Dollar cost averaging applies the same principle to investing, helping you buy low and potentially sell high over the long term. Take control of your financial future. Start investing today. Congratulations! You've just taken a crash course in investing and learned some valuable tips to set yourself up for success. Now it's time to take action. Remember, investing is not just for the wealthy or the experts. It's for anyone who wants to build a brighter financial future for themselves and their loved ones. The key is to start small, stay consistent, and never stop learning. Don't let fear or procrastination hold you back. The sooner you start, the sooner you can harness the power of compounding and watch your money grow. Need help getting started? We've got your back. Feeling a bit overwhelmed? Don't worry, you're not alone. We've got your back with resources and tools to make investing easy and accessible for everyone. Robo-advisors. These automated platforms create and manage a personalized investment portfolio for you based on your risk tolerance, goals, and time horizon. Micro-investing apps. Start investing with just a few dollars. These apps allow you to invest your spare change or set up small, recurring investments. Financial education websites and blogs. Empower yourself with knowledge. Countless resources offer free articles, videos, and courses on various investing topics. Ready to dive deeper? Check out these resources. Want to learn more about specific investment strategies, market trends, or financial planning? Here are some excellent resources to quench your thirst for knowledge. Investopedia, your go-to source for all things investing, with comprehensive definitions, articles, and tutorials. The Motley Fool, get expert stock recommendations, market analysis, and investment advice from a team of seasoned analysts. Khan Academy, learn the fundamentals of finance and investing with free, engaging courses taught by world-class educators. Join the conversation, share your thoughts and questions. We're here to support you on your investing journey. What other investing topics would you like us to cover? Share your thoughts, questions, and experiences in the comments below. Let's build a community of empowered investors one step at a time.